Listen to your message.
All right. All right. I hope I'm audible now. Not like the last time. Um, I know this is a lot of information for a lot of you guys to process, but trust me, when you have and when you're able to understand what the Ipda does, what the interbank price delivery algorithm does in this market, then you understand that the market doesn't move randomly. Then you understand that there is a reason to each and every movement to this market, and the algorithm has a specific way of running both buy side and sell side liquidity in regards to where it is that the market is currently using the data range printed. Now, all this has to do with data. All this has to do with liquidity. All this has to do with every single thing that you have on these charts or on these class. These alone, with these alone, you can become consistently profitable. Now, I don't tell you that these alone, tomorrow you will become consistently profitable. No, these alone, if you apply thoroughly and then you do a back testing and then you submit to the time required and do your own due diligence by doing your own little researches on whatever currency pair it is that you choose to embark on this journey with. It'll give you the opportunity for you to see this data unfold or see the previous data or the previous information using this concept, how it is being implemented in every single step of the way, in every single chart. You would see something like a quarterly shift, either a consolidation or a move or a breakout or a retracement, something would be happening. Go onto your pairs, go onto your previous data that you've been, the pairs that you've been trading, go through the previous data that the market printed, go through it all, see what the market has been doing for the past months, and test this concept with it, and come back and tell me if these things are not happening. And trust me, you don't need a lot of strategy to become consistently profitable. You just need one that works for you, and you care less of what is going on online, because please, online, everyone is correct. Everyone is doing something that is great. Everyone is doing something that they think that is best than the next person's own. So please, do yourself a favor and stick to what it is that you're trying to build, and stick to your conviction and your strategy, and build confidence in your strategy, and you would see how these will unfold in your favor. But for that to be able to happen, you need to ignore the noises that you see online, because everyone has something to sell nowadays. They have signals, they have classes, they have referral link bonuses that they want you to sign up with using the referral links from brokerage firm, because that's the way to make money. And it's our business, it's become more business. Nowadays, we have more Forex influencers than Forex traders. And I keep saying this over and over again. Nowadays, it is disgusting how our environment, our community is becoming, and how alarming a lot of these people are spreading thoughts online because they want attention to themselves, and they want to sell something because they've come to understand that it is way easier to make money in Forex selling classes than actually trading the market. Thus, leading to them doing the marketing strategy as much as they can, using influencers and publicity agency marketing and every single thing towards their advantage. Hey, listen, no hard feelings, no business. It's none of my business. But then I believe it is our fiduciary responsibility to guide the audience the right way towards this niche where a lot of people, or is filled with deep fake And a lot of people don't even know what to believe anymore if Forex is even real, or if it's even authentic, or if we even have honest or authentic traders nowadays. I know a list of very few people that I can vouch for, that I can endorse, that these are like real traders, that we've had this journey for the past 6 years together along this road. And guess what? I'm still learning up to today. Just so you understand how learning or becoming consistently profitable in this business take some time. Now, I can't guarantee you success because you just watched this video. You're going to go over, oh, I'm going to start making money with it. I can't guarantee that. This is a disclaimer. But with these information that I'm giving you, open your eyes. Yes, it will open you as to a whole new dimension, like to a whole new level, especially if you've been following up with our tutorship. And these are informations that I'm giving you guys here for free. And I bet you some of these people that put fat fees and subscription towards their mentorship program would not, or they don't even know these things, or they won't even show you these things. Or little would they even, maybe they don't even know about it. That's why they can't even show you something that they don't know about. And even if they do, they won't even give it to you for free. Now, this is what giving back to the community looks like. I've organized conferences. I've never charged anyone for it. It was not sponsored by any external brokerage company, please. I did it myself. I do free mentorship programs. Since the beginning of this year, I've been offering 6 free mentorship programs, and I'll be doing so till the end of the year. It is time for our people to wake up. It's time for people to understand that we have more marketers nowadays in the Forex industry than actually traders. If you want to go the right way, you know where to go to. If you want to become a business and a Forex marketer, please be my guest. But this is not the place for you. This is not the environment for you. We are too big to rake, and we are factual, and we don't sell dreams to no one. We don't even tell you anything that will sugarcoat you or that will make you want to stay around. If you want clout, this is not the place for you. You should go somewhere else. If you want somewhere that people are going to raise your hopes up because they want to caress your emotion, or they want to make you feel comfortable because we want you to keep paying your tutorship every single month because we want that your money, so that we'll keep selling you the lifestyle that you're subscribing for online. I'm sorry to break your heart, but this is not the environment for you. So, sorry for my random talk. Sometimes I get too emotional. Sometimes I just let it go out, and then back on point. So on our previous video, we're explaining why actually we put this point of reference while trading and using the look back period on the interbank price delivery algorithm data provided, and we'll put a vertical line. Now we had to put like what? Yeah, we had to put like a horizontal line on this key zone so that we see what the market is offering, or what areas the market needs to start reaching out for and why. These points are very important, so that every single time when you see the market reach here and you start behaving some kind of way, you know why the market is doing that. We've put horizontal lines on the old price high because this is what we said, looking backward, 60 days trading days. And next point, identifying institutional order flow. Another point is refer to the recent institutional reference point, which is old price high, old price low, bearish order blocks, right? Bearish order block, which is where the low actually are mostly areas where we'll have a bearish order block, so we don't need to put another horizontal line. Bearish order block and fair value gap that the market created, right? We have a fair value gap here, right? Now, if we go on a higher time frame, we'll have a fair value gap on maybe the weekly or the monthly time frame, somewhere around this area or something like that. right? So those are the reference point that we want to see this market buy back into to fill. So we have a look back period that the market has provided a data range for us to be able to anticipate the market casting forward. Right? Now anchor vertical lines to the previous market shift. A vertical line to the previous market shift. Where was the bearish move? Where did the bearish market start? This area. So let's box this area. Where the market shift began. That's where the market shift began. Right? So now we want to cast forward. We want to see what do we expect this market to do. But before casting forward, after the market has been collapsing for the past 60 days and a month or so, what happened on this day? This day, why did the market collapse aggressively on this day? Meanwhile, probably people had the hope that this was the end of the bearish movement and the bullish movement has started. But immediately the market formed equal highs, which are a very important reference point that we will keep an eye into, because the market needs to run the buy stop sitting above these equal highs. Casting forward. See the way I'm using these all analysis and combining them together to be able to create a masterpiece. So what happened at the beginning of April? We saw a drastic and aggressive collapse in the market. Why? That is where the open float comes in. Now, you see the way we left from liquidity to quarterly shifts to look back, cash forward, and open float. Now, what is... Yeah, someone said something.
Oui, monsieur, ça court toujours, mais le matin, quand j'ai...
Bro probably forgot that his mic is on and he's speaking with his boss. Okay. Sorry, man. Don't take it personal. I'm a non-conformist, so sometimes sorry, sometimes it's just me talking to myself about myself. So yeah. What is open float? Open float is a current trading interest above or below a current market price. So we reached the end of the first quarter, but then the market had a sell-side liquidity imbalance that the market had created, that the market had not yet filled, that the market needed what? Open float can also be called Wyckoff because it's technically a certain run and stops. Now I'm gonna leave from the 4-hour time frame and let's boil it down to the weekly time frame so you see what I mean, right? Open float. Now on the weekly time frame, let me zoom it all in. On the weekly time frame, there was a fair value gap between this low and between this high. There was a fair value gap that the market filled, right? Now the market filled that, but then there was another gap on the daily time frame. If we move to the weekly, let's go to the daily. Below the weekly gap that the market had already felt before the little bullish run above, where a lot of people thought that this was a switching trend traders. So what did the market do? The market needed to sell to this gap. Look at the, oh, sorry, let me remove this and pick the dots. What? Okay, this is preferable. Eliminates the noise. Okay, look at the low of this candle and the high of this candle, right? Look at the low and the high of this candle. Now what we're gonna do is gonna take a rectangle, right? And take from the low of this candle to the high of this candle here and draw it to the right like this. And then you see how the market behaved immediately it seeped into this area. The market rejected aggressively, rapidly, like very rapidly. Why? Because this was an open float. This was, call it a running stop if you want. But open float is the rapid, we call it open float because it mostly occur, this movement mostly occur at the end of a quarter because the market need or has a certain rush to fill the specific imbalances that it had created within this period, and it was unable to fill it on time. And now this is a new period that is starting. So the algorithm needs to what? It needs to seek for this liquidity rapidly before switching lanes. And this is what happened here. This run was very fast. For those who held this trade last week, you understand that on Friday, the market went crazy. In fact, last week alone, the market was kind of very weird and crazy. I mean, I personally, I took a hit, not to lie about it. I'm not going to lie, so from this as well. So the market, you see that we took this low and this high and we draw it to the right. Now, finding a lot of risk. Now, this has, or this is a confirmation. Sorry, guys, let me mute some of you folks that have your mic open. Give me 1 second. All right. So these give us a confirmation that from this point, there's a huge possibility that the market is about to switch lane from its bearish movement. Now we have a first confirmation from the cast, from the look back data that the market provided. We have the open flow theory that was being respected. Second confirmation. Or you can call it a white curve. Then now what do we expect? We need to be able to cast forward. So when open float is used to determine buy-side liquidity, short protective buy stops above last bearish shift. When is open mainnet used to determine buy-side liquidity? Short protective buy stops above last bearish shift. Buy stop above short-term high. We have also buy stop above highest high in the last 3 months, which is what I was explaining. We have buy stop above current 6 months high. And we have buy stop above current 12-month high. That is when open float is used for buy side liquidity in order for the market to sell. Now, long-term perspective, which is sell stop open float, which is what we had here. What do we expect the market to do? We expect sell stop below short-term low to be run. We expect sell stop below the low of the last 3 months to be run as well. We have sell stop below the current 6 months low as well to be run. Then we have sell stop below the current 12 months low using the interbank price delivery algorithm data. Now, let's go back now to the cast forward. Understanding all of these things, understanding all of these minor little details. When you have all these put out together, you would understand why some certain order blocks fail and some certain order blocks have been respected. You understand why most of the time the market kicks you the fuck out before the market goes towards your direction of biases. You're not wrong, but you probably had the wrong stop loss or the wrong stop loss or the wrong analysis. There's a common question I always ask all of my new traders when they want to start going through my mentorship program, or you get to me and you ask me some kind of question. I'll be like, I'll be very blunt and I ask you this question. I'll be, if you are the owner of a 6.6 trillion traded business every single 24 hours, would you be able to give out a recipe of your business to the public out there for free so that they come into your business and they ruin you? No businessman will want to get out of business. Forex has a shit ton of money. Fuck your money, if I'll put it like that. A lot of it that they are able to put in or put out whatever information, however, whenever, at their sole discretion out there. That is why I always advise the easiest way I want to start tutoring someone, I'll tell you this. Everything that you've learned online, do the reverse of it and come back to me for confirmation. You will thank me later on. Because this business is a lose-sum game. For people to make money, you need to lose money. These institutions, that is why most of the time these institutions already know where your stop loss is. Why haven't you asked yourself sometime, why is it that when this market kicks me out, it immediately start going towards my direction? It's like they knew where my stop loss is. Yes, they do know because they gave you those informations online. They gave you those information for free, and they know that most and 90% of you guys are trading using those information. So what does the market do? It does the reverse of everything that you think you know. Because that is where the stop loss is. That is where the stop loss of the majority is. Now, when you're able to switch this, when you're able to switch this mentality or the old mentality of whatever strategy, whatever methodology you had that way you were going about market, and other than every single thing, do this, back test it. Just do the reverse of whatever it is that you think you know in trading already so far. As if you are a beginner trader, you've not gone through my mentorship, you want to start my mentorship, because my mentorship is like maybe a reset for a lot of you guys. You know, maybe you're not even understand what I'm talking about. So maybe some of you guys even on here don't even understand, and it's okay. But doing the reverse of what it is that you think you know, just start back testing. Whenever you have a clean sell setup that appears in with your trading strategy, instead for you to execute a sell setup, take a buy there. Like test it on a demo account, take a buy there instead of you looking for that, instead for you entering that clean sell setup. Test it like that with no emotion attached and come back to me. You would notice something different would change. And if you're not careful, that will be the key to unlock your consistency. Because when you're able to switch that, it's like they've removed the shade that was covering you from seeing clearly. And then you can create your trading model from that. Another advice I used to give beginner traders is, you see the market, one currency pair is enough to make you ridiculously rich. Now, in this one currency pair, we have both buyers and sellers, which means we have hedge funds that are looking for just sell opportunity, and we have hedge funds that are looking for just buy opportunity. Go into the market. For beginner traders, go into the market, focus on one side. And what do I mean by one side? If you are a good buyer, look for only buy opportunity. That's it. Any sell opportunity is none of your business. Please, you want to stay the hell out of it. Look for just buy opportunities. Why? Because some of us don't know how to multitask. Some of us don't know how to do like buying and selling at the same time. Now, if you're a good buyer, and you're able to look for just buy opportunity for the next 6 months to a year, and I'm not telling you fictions, I'm telling you factual stuff. That is what I have done, and that is what I did that made me become consistently profitable. And I have proof for these, and I have folders for these that I use the same information to pass prop firm that got me paid over $57,000. And these folders, I said, I'm going to start, I'll upload these folders. I have a documentation on how to pass prop firm, how I bought a prop firm account. I passed phase 1, phase 2, I got it funded, I got paid out. a huge bunch of paychecks from it. I documented it. I kept it for my VIP, for my private tutoring mentorship program. And now guess what? I'm gonna give it to you for free on my YouTube channel. The only thing you gotta do is you just need to subscribe so that you don't miss it. Or you stay in the channel when I upload it, or share the link. I'll do it later this week. This is for prop traders. These things works. Look, focus on one aspect, just one aspect. If you're a good buyer, look for only buy opportunities in this market. I can't emphasize more. Only buy opportunities, look for it. And now guess what? When you become a good buyer, the only thing you need to do to become a good seller is to do the reverse of the buy setup that you are looking. Bingo. That's it. But you need to be good at one first. If you're a good seller, look for only sell opportunities in the market. Ignore all the buy opportunities and take it as a retracement for a more bearish opportunity. And when you become very good at selling, you do the reverse and you get your buy setup. That's it. That is it. Boris says, sir, your voice keeps breaking. I don't know if it's my bad network or it's the same for everyone. So my recommendation is that you should test the video record to see if your voice is stable after the class so that you can upload on YouTube. Okay, thanks for the recommendation. I don't know if anyone has a question. Any questions so far? If you have a question, please, now is the time, because okay, go ahead. Please, guys, start sending your questions now so that we can answer all of them before we end this class. So, now having this data that is being provided here, it gives us an upper hand and a bigger picture of how we could use the cast forward. Now, these are the areas where we'll have a horizontal line. Those are the areas that we want to be looking and casting forward that this market will go to. So any retracement towards a bullish order block after this open float that was performed should be a buy opportunity for us to enter buy position heading towards our overall bigger picture of the next quarterly shift for the second quarter, of course. Yeah, for good buyer, what you can do is you start first of all by avoiding any sell position. Why? Because you want to build a discipline in yourself and try as much as you can to withhold yourself from the temptation of looking for all short opportunities if you ignore the short opportunities and focalize on more buy opportunities, if you want to focus on your buy more. This alone, it helps you to build discipline. It helps you to be true to yourself. It minimizes risks as well compared to someone that is buying and selling at the same time. It reduces your risk as well, and it helps build confidence. When you see these things keep unfolding towards your advantage, it builds more confidence to your trading strategy. Yeah, you should hold your buy on USD JPY. We would have probably some little retracement to the downside, maybe back to this level for bullish continuation. If you have the guts to hold it, hold. If you don't, you can collapse it now because we see that the market is it could be bearish for the next 4 hours, which will lead to the market dropping back to these key zones, this key support area of a bullish 4-hour order block and the daily bullish order block as well, and for the bullish momentum. So if you can hold it, this retracement, you could collapse like 90% of your trade and leave like 10% running, so that you wouldn't get emotional should in case this market sells and it gives you another bullish entry for you to buy more. So it's up to you. That's how you want to be managing your trade. Let me clean this up. Any other questions, guys? Okay, for a beginner to take gold as his main pair, I want to advise you to go into any bonds or commodity because they are very heavy, first of all, one. Secondly, the market volatility is enormous. Thirdly, the lot size is there, it can ruin you in less than no time. So I wouldn't really advise you to go on something like metal, gold, US oil, all of those things. You should avoid them for starters. Those pairs are too volatile and they can ruin you. They can blow your account in less than no time, like real fast. Okay, let's see what GBP USD have. Boom. Mine has been crashing like, damn. What do we have on a weekly? If I were you and you're trading GBP USD, I would be out of USD for a while. Excuse me, GBP USD for a while because the market is unclean right now. And it's better to stay off the market. Someone just came with Pi USD. Ever made seriously? What do you think about Pi? I'm a pie holder, and then Forever and Profit is a brand that we would start talking about pie network, agriculture, and forex trading in the nearest future, because that is what we would be building our community based off of now henceforth. Pi is a lucrative project, although it has been crashing since it reached an all-time high of $3 and so. Right, so that's it. I don't have a lot of data because it went public this year. So we don't really have a lot of data to play with. And the market has been crashing ever since. So the last time we had an all-time high was trading at $3.3. And then we had a second new high at $3 when the market reached $3, and boom, it tanked to where it's at right now. So it'll rebound back, of course, but I think the PyCore team needs to be a little bit more explicit and explanatory to its community than they are currently, because a lot of people are losing hope. A lot of people are giving up on the project. You know, people like us are just rock solid because, you know, we have all of our time maybe locked up for a very long period of time. So regardless of the market volatility, we're not selling, we're holding diamond hands, you know. So that's pretty much it. All right, guys. So we don't have any more questions. So let's call it a day. And oh, another question came in hot. Would you please send me buy entry for USD purchase? Let's see what I can do. Let's see what I can do. Let's see what I can do. See what I can do. Because this market can just keep buying here. So we just never really know. But another bearish opportunity could be a sell opportunity. It could be a buy opportunity for you. So if this market does something like this, that's your buy. So this. And if you're buying somewhere around this area, your stop loss should be here. Any future price prediction? Price, I believe price is going to get to more than $10 by the end of this year. That's my belief. $10 is not a fantasy. $10 is realistic compared to people that have the GCV consensus, whatever, blah, blah, they are going on there, man. $10 could be possible. We could see that by the end of the year. $10. Maybe that's the reason why we're having these bear runs, because we want to shake off retail holders and buy them at a discount while the market start reaching for new highs. So I think it's just the market manipulation kind of thing that's going on right now. So if I stay